Blog, February 13th, 2011. I haven't done a blog in 3 weeks, but today's the day. Looking at the PE ratio of the S&P 500 continues to go up, currently at 24.08. Wall Street is telling everybody that now it's good time to buy the market, and at 24. We're almost back up to the highs of 2007. So in no way is this a good market. And this was top of the last bubble. And right now we simply have another bubble that has formed. Obviously Wall Street bought down here at P ratio of 15, and now they'd like to sell out at 24 or higher, because obviously they need cash in order to pay themselves their bonuses. So that's what's going on there right now. Basically, the big picture is the United States and many governments around the world are simply creating money. I don't like to say print money because we don't print it anymore. They allow for conditions to flood the market with liquidity. The market, of course, has no use for this liquidity except for the stock market, the capital markets. That's where the money goes, and it drives stock prices higher. Stock prices have nothing to do with fundamental underlying economic fundamentals. They're simply a question of how much money is out there and what can it chase. And in this world, it can chase stocks. So that's where that goes. In no way has anything improved underneath. Fundamentally, we are just as weak as we were before. Going on, um, let's do some news stories. Some news stories I've come across. Obama urges U.S. business leaders to increase spending for the good of the country. Well, the country has bailed out the businesses and the banks, but of course the banks and the businesses do not want to return this favor at this point. They like sitting flush on money, and they have no interest in hiring people in their own countries if they can just hire people out of the country to do the same work at a fraction of the price. So what went around certainly is not coming around at this point. Wall Street is once again up to um, lending money, just like they did back in 2007, 2006, lending money to real estate, because real estate obviously is the place to go according to everyone. We're on the road to recovery, and real estate is going to increase substantially from here. I don't buy into that personally. I think there is more pain to be seen until we come down to a level of rational values. We're certainly not there yet, and we were never allowed to go there. But the news is full of stories of how the recovery um, in housing is going on. The commercial real estate actually did not drop quite yet. There was a lot of bailing out there, and therefore the collapse of the commercial real estate that was supposed to happen has not yet happened. That doesn't mean that commercial real estate is any more feasible than it was before. The problems have simply been pushed down the road. But here's another bullish story of new home recovery scene, blah, 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 blah. And my take on that is people don't have money. You've got 17% real unemployment. We're talking U6, not U3. And if you take 17% of people out of the employment equation, then that does not bode well for a recovery in housing. It talks about U.S. Foreclosures having dropped for a fourth month, but even the article says that that's more likely to a scrutiny on the lender side rather than an actual recovery. Let's see, I actually did have an interesting story here. The home price, according to the Schiller Real Estate Index, Schiller Real Estate Index looks like this, and this is home price index across 20 major cities. across the US and has dropped below zero back in January. So house prices are once again going down, not up. Um, it would be great if they continue going down because people need to buy as well, and that's the reason why nothing is moving is because prices are too high. People cannot afford this. We have an interesting story talked about that the federal government would like to have allow states to increase unemployment insurance taxes so that they could get some taxes to run state operations. That's not going to fly because that digs even deeper into how much it costs to employ somebody in the US versus to employ somebody in China. So all this does is actually make it worse, make the American worker even less competitive on a world scale than other people in the world. Here's an interesting story that I came across. Iceland, of course, was a disaster 2, 3 years ago. They decided not to bail out their banks. They actually decided to let some of their banks fail and have the bondholders and the shareholders carry the risk. And they have actually shown now that within the last 2 years they have actually recovered rather than just extending what doesn't work further and kicking the can further down the road. So Iceland seems to be in better shape now. The US should have done the same thing. They should have let their banks fail, just like the Europeans should let their banks fail. Because if you lend money to people that have no hope of repaying it, like places like Greece, Spain, Italy, and so on, if you lend money to those people, then tough luck. So here we have oil. Looking at oil, and oil has not made a new high here. It's actually dropped quite substantially this last week. There's a potential here for a lower low. The other thing that I've noticed is technically um, this second high, it's almost a double top. Okay, it went a little bit further, not a big deal, a few pennies. But what I see is the RSI has declining tops and even possibly declining bottoms. So there's a downtrend in the RSI, even though there is a slight uptrend on the price side. That does not look very good for oil being particularly strong. Natural gas has been dropping substantially. I had some natural gas back here somewhere. I did sell it over there close to the highs. It was starting to come down, so I ditched it. And natural gas is once again lower here, becoming quite affordable again. I am thinking maybe I want to pick up something once it goes into this general range because people continue to need to heat their houses. That's just a fact. Gasoline prices have of course been going up very strongly, and that sucks even more money out of the pockets of consumers. Between that and the increase in food prices, the consumer is very cash strapped. Are they going to have money left over to take on yet another house? I don't buy it myself, but then I must admit I am bearish. So gold has made a few lower highs here. Is it going to drop? I don't know. There's the long-term support line here. It can still go until 1290 and not break that long-term support line. Or perhaps if it did break that, if it did break the 200-day moving average, then that of course would change the view of gold. Silver is very strong, still continuing to be strong. Silver market is of course much smaller. So the silver gold index exchange rate continues to drop here, um, and eventually this rate will probably end up in the neighborhood of 16 to 1, which is the natural exchange rate between gold and silver, and we're long ways off there. So given the choice between buying gold and silver, silver is still the smarter investment, but hold on for dear life because silver is volatile. Gold in euros has dropped below the 200-day moving average. So it's always important to look at gold in other currencies, not just the US dollar, because of course the US dollar moves as well. It's not it is a currency that fluctuates as well. It has been going up a little bit. The VIX has pretty well flattened out around here. Maybe it's building a base. There should be some worry coming into this market at one point. I'm not holding my breath because I don't know. People are simply amazingly optimistic, and they seem to believe what they want to believe. So, but I continue to buy the VIX futures because they're cheap right now, and eventually, sometime this year or next, um, things could potentially get a lot uglier from here. The New York composite continues to go straight up in a straight line. If there's ever been a chart that looks manipulated, this would be the one because things are not really supposed to go up in a straight line like this. But if you've got the full resource of the US taxpayer and US lenders behind you, I suppose you can bring about just about anything by simply continuing to buy it. Um, core sectors. So this is of course, the S&P 500 itself. It continues to be practically a straight line. There's no weakness to be found anywhere here. The 1030 exponential moving average stays nicely apart, so this chart continues to be amazingly bullish, which is of course the huge influx. $1.5 trillion of borrowing every year, and it finds its way into the stock market as well as other places. So that will continue to drive that up until lenders stop lending, but that's not quite yet. Um, could be tomorrow, I have no idea. But right now, this is still a very, very bullish chart. Materials, again, very bullish. Energy, bullish. Financials, bullish. This is all the same chart. There's no difference because money is being spread out evenly across all of these. Industrials, bullish. You would think that one of these is weak, but there's nothing weak out there. Technology, bullish. As I said, it's just a steady influx of money, and all Wall Street can do is buy, buy, buy because, well, if they buy and it goes up, they get bonuses, and if it goes down, well, the taxpayer will probably bail them out yet again. Consumer staples. Consumer staples is a bit weaker than consumer discretionaries, which is weird, but so be it. Utilities is again strong. Healthcare strong, and of course my pet peeve, the consumer discretionaries. Considering the consumer is broke, considering that gasoline is going up, by all accounts, this should be going down because money is being sucked out of the pockets of consumers. But this is not going down, this is going straight up. And it is amazingly frustrating to bears like myself because we know that the longer we wait for this correction, the worse it will be at the end. But in the meantime, there is no place for us. If you try to short this market, you'll just get slaughtered because there's no rhyme or reason to it. Don't really have anything else except, if you continue to be bearish like me, it's nothing to do but stay on the sideline and wait. This thing has gone for way longer than I thought it would, and it's just a question of how far do the authorities want to leave the Western world in debt for future generations. How with at what speed do they want to speed Titanic towards that iceberg? Because that's what it comes down to. There will be a crash. It will be bad, and the worse they make it, the longer it will take, the worse it will get. And if it gets really bad, then we're looking for World War III or something like that, because every financial crisis has been followed by a major war. We can never pay off our own debt, so we try to stick it to somebody else. And if you look throughout history, that has always been the case. So So as I said, it's just a question of how far our authorities believe to ruin the country to bring about something that is not supposed to be. Anyways, that's all I have for today. All the best. Hope you make some money, even if you're bearish next week, and enjoy. Bye.